Good morning, everyone. Happy Monday. And here is our gap. Oh, Raj was calling for a gap on Saturday. Again, how's everybody doing? Well, I told you this market was going to get challenging. There you go, Raj. There's your gap, man. Again. Here we go. Oh, boy. So, a little bit of news. Once again, news and a gap up in Globex. Let's see if that gap holds. Okay. We are also in the middle, so that to complicate things, right? Because hey, why have stuff nice and simple, right? We got to complicate things, right? So to complicate things, we have a gap in the middle of contract rollover. So I'm sure the people who are caught short in the old contract are just loving this. Uh, well, they had 3 days to cover down here under 73.91, so here's the old contract, and it's traded 77,000 contracts. The new one, which I've switched over to, has traded 74,000. So throughout the day, you'll see this number, this 74,000 number. It'll start moving up and it'll start overtaking the old one in volume. Okay. We're up almost 100 points. You can see that the new contract is about 60 points higher, which is normal. And yeah, so I'm gonna redo the kind of old balance levels. So you move when you have the gap, you can see that there are areas where we have unfilled gaps here, and then we have this massive gap, up here. So down here, in that 67.88 area, then there's another one here. So the whole thing that all gaps fill doesn't really make sense, right? A lot of traders, unfortunately, are conned into this all gaps fill kind of thing, and that's just not true. All gaps will fill if you have the order flow to fill them. It's really that simple, right? Gaps will not fill unless the order flow exists to fill the gap. So whatever you've been taught, you know, uh, get rid of that because, we have gaps from years ago that have not filled, right? And you really want to watch out for that because unfortunately, um, it just it really messes people up because they'll be shorting the gap, and all of a sudden it doesn't fill, and then it goes in gaps again, right? So yeah, you something that you want to be careful about, something that you really want to watch for, and yeah, just remember that all gaps do not fill unless the order flow exists, right? It's hard to tell what the trend is, right? Now, I've done videos on this. I've done videos on why they don't fill. I've done videos on why markets do what they do, all of that good stuff. So they're there. They're for you to please go and watch. Last week I had some major breakthroughs in teaching um, on why things are happening and why people are having struggles, and we'll go into that as we progress this week. I'm putting together a focus group with maybe 5 to 10 people max, and from people in the room who are members of the room. What I'm looking for are people who listen to instructions and people who will actually do what they're told. Quite simply. I know it sounds horribly egotistical, but I'm looking for people who will listen and do what they're told. Those are the two most important things of what I'm looking for this group. And what I'm going to try and do is I'm going to try and train these people to listen. And I'm going to try and train them to focus. And what I want to do is I want to ask those people every week how much money they made. And if they didn't focus, how much money did they lose? Right? And we're going to start doing that in the room. I'm going to ask people to reach out and tell me how much money they've lost. Because I was talking to someone on the weekend and she said, these guys they don't understand. They're not they're not getting what it is to lose money. So, and they're not listening, right? They're blowing up accounts. They're buying breakouts when I tell them not to buy breakouts. Just really basic stuff that they're not listening to. So, we're going to start doing that and see if it improves your listening. If you have to be accountable, maybe you'll listen. We'll see, right? We'll see. Jury's out. So right now we're completely in a short squeeze, right? We have single prints in our market profile. There's the gap. There's the Friday high. This is the new contract that I'm looking at. The new chart book is put in the room for you guys. So if you're using Sierra Chart, please grab the chart book. So here we are. Here we are, right? This is a trend, this is a gap and trend up market, okay? So I've drawn a balance zone here, right? Definitely change in business, right? There's Friday's close, there's the gap, right? So I've got a balance zone between 53 and 61, double it to 77, double it again to 76.09 and 3/4. So I'm just gonna go and put in the levels, okay? And what you want to do on days like this, right? We have change, right? The market says that there's change. Why does it say we have change? We have a gap, right? A gap means change. A gap means that the prices that you paid on Friday are not the prices available today. So what I'm going to do, because it's a new contract and I've never traded it, I'm going to sit and watch it for a while. Okay? So now I see sellers at 75.96, right? Overnight inventory is long, gap long. It's about as long as you could get, right? So you see now that we've got sellers coming in, right? And London's going to open in a few minutes. Where's my clock? There it is. Right. So every chart has a timer on it that tells you how much time is left in the candle. So here we go. Set the stops. That's where there should be some responsive buying when we come down. And if we break that stop here at 75.85, then the people who are long above it will pop out of it, right? So we filled these single prints on the way down. There was a short position, and now there's some short buying covering coming in at 87. Beautiful, okay? All righty. So it's Monday, haven't traded at all yet. It's a new contract and it's gap up. So now, does that mean anything to you? When I talk like this, if I say, oh, it's a new contract and it's a gap up, do any light bulbs go off in your heads, or is it just whistles right through your head and you're not really, don't really care? You just want to trade, right? I'm trying to figure out how to get through to you guys, right? There's about 1 to 2% of people who actually listen, take the information, and use it to make money. The rest of you are not doing so, right? So you understand that something is changing, right? So when something changes, how should you deal with something that is changing, right? The gaps does not need to be filled. If the order flow exists, if the type of business comes in, we could fill the gap. If that does not happen, the gap could stay there for months, years. The gap does not need to be filled. The market does not need to do anything. The chart is just a representation of the business transactions that are taking place. So the business will just keep trucking. Whether or not you adapt to that business and make money from it is up to you. Okay? So nothing needs to happen. Is there a possibility? Maybe. But the gap, we're trading right now at 75.88. The gap fill is down at 75.24 or 25. So at this point in time, no, the gap is not going to get filled, right? If now all of a sudden somebody launches a missile, we could fill the gap, right? Very simple stuff, right? So this is a bit of an inventory correction, right? Now, if Milo was around, he'd see that there is inventory above 75.90. It is selling out. It is coming back to this little position here. You can see that they stopped selling just around 87, 88, and they're lifting the offer. So when that happens, and you see a big green candle or a couple of green candles after a seller, you go and you mark where the sellers were before. You see? So if the market gives you a long trade, you know where to sell, right? Now, let me ask you guys, let's see how aware you are. Given the market conditions today, what is your business plan and how are you going to adapt that business plan according to the change in business that has happened since Friday? So, what should you be doing when you walk in and you see a chart like this, right? Gap up, right? Contract rollover. How are you going to conduct yourself today, right? Exactly, John. Exactly. Right? And exactly, Raj. So no FOMO, right? You're waiting for A plus setups. Right now, is there an A plus setup? I mean, if you are consistently losing money, right? You know, I talk about consistent profitability. What about the people who are consistently losing money and taking bad trades? What is your plan of attack right now? Okay, I want you to think about that, guys, right? Think about that and really have a think about it, okay? All right, so London opens, comes down to the 85s, catches a bid right there where that stop is. They start lifting the offer. Now, when they lift the offer, you want to see where they sell into it. So give the candles a chance to come in and show you where the bids are, okay? Where the bids are where the sellers will stop selling. Really simple. Right, so they saw buyers under 85, they start lifting the price. See? Now somewhere in that area they're going to sell into it. So you're waiting to see where they sell into it, right? Let's see if they can pull it up over the 88s. Otherwise, it'll continue to move lower as inventory corrects lower. Okay? Inventory is long. You're looking for a correction lower. Okay? If the market does not correct lower, it's trying to tell you that it's bid, right? So the normal type of business is to correct lower, and that's what's happening. So that's a good thing, right? So they saw buyers above 88 just for about 10 seconds, right? Right back down. So that seller under 88 has engaged again, or that group of sellers. So now you know where the selling is, right? Very simple. And that's what you're doing when you first start trading on a Monday contract rollover with a gap out, right? Exactly. Don't be stubborn in a trade with bad location. So what you're doing right now is you're trying to gather intelligence, right? Because a lot of things have changed since you traded on Friday. So what smart money does is smart money sits and watches, makes notes, sees where the bid is, see where the cost basis is, see if the order flow is fast or slow. You know all those things that I put together in a checklist that you guys all ignore? Remember the checklist that nobody ever talks about, right? That's been out only for about 5 years now, right? That's the kind of thing that should be going through your head. What's the price action like, right? Is it slowing down at the stops, right? Where are the bids, right? Because the offer starts lifting there, right? You want to be going through that now, right? There you go, Moran, right? So what you want now is you want tactical information about how you're going to trade this, right? And what you're doing is you're going and you're getting that information. Let's see if that 90 seller is still there, right? See how they came in at 89 and 3/4, right? Just little things like that. Remember, the point of control is all the way down here at 56. That's where the inventory is priced this evening. And we're trying to get rid of it up here. So that inventory, we're looking for that point of control to move up. It's only 662 contracts, so it should move up here in the next little while. right? Is it 662? Oh, 682. Okay. So it's close. Look at that. So now you know the shorts are trapped here. Big green candles, right? They sold the market down. What happens when they sold the market down? It brought in buyers. So that's an area that you should be marking off on your charts, right? There you go, Moran. There you go, right? There you go. Next area the sellers are going to be at is up here at 92 quarter. Okay. And that's how you trade tactically. Now you know where things are. What would be nice is maybe we get a nice balance here that you could trade back and forth, right? Maybe it stops out at 92, comes back down, and then you can buy the 86s, 87s, and sell the 91s, right? If you can trade, right? If you can't trade, sit and watch, right? What do I mean by if you can trade? I mean, are you consistently profitable? Right? Do you only make good business decisions? All right. That means you can trade. If you can't trade, you got to learn how to trade. You either can trade or you can't trade. Right? If you can trade, you're paying your bills and your rent and your mortgage with your money that you're making every month. Very simple. Right? If not, look, point of control moved up. There you go. So now we have good distribution. Right? We took all that cheap stuff and we're selling it up here. Now, we've already corrected inventory a little bit. We're going to look for some back and forth action. And if enough people are short under 75.90, they're going to rip the 92s and we'll come back up to 93 and this area here. See? How many people followed price and got caught short under 90? Quite a few. How can I tell? Because of these two big green candles, they all came to cover at the same time. Do you think that somebody's trying to buy 5,000 contracts or a position at the highs at 3 o'clock in the morning in New York? No. So the people who are buying now and people who are buying aggressively are those who are trying to cover their short positions, right? That is tactical information that nobody will tell you, right? They'll say it's random. No, it's not random. If you believe it's random, I've got oceanfront property in Arizona to sell you. It's beautiful, right? It's no such thing as random when billions of dollars are at stake. No such thing, okay? There's your seller at 92 quarter, right? How did I know that there'd be a seller there? Because they sold there before. Why would they sell there again? Because they have size. See? It's simple. And they're going to go back and forth and distribute it. Here it might get a little slow. It might get a little choppy. But now you found the bid, right? When London opens, you know that the under 86 there are buyers. So on the next liquidation, say you get into a short, right? Say you get into another short, right? If the market gives you a short, what you want to do is say you're short 92, right? Say you're short 91, 92, right? Right now. You're short against the seller here. That's what you're doing, right? Your stop is here, you're short here. Where are you going to put your buy orders? Well, here, 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 here. And you're going to let the market come down and hit you. If they don't get executed, then you'll grab the offer, right? Very simple. So you're short 91, you've got an 89 and a half, 89 and 3/4 bid. Boom, one's filled. Your next bid's at 88 and a half, right? If that bid does not get filled and you're short 91 with a 92 stop, go buy one off the offer, right? Don't be stupid. Take it, right? If your bids don't get filled, it means that there's nothing for sale at the price that you're trying to buy it at. That's all that that means. So you have to pay up. Got it? Does that make sense? does that register with you guys? So if you're short 91, your stop is 92 and a quarter because that's where the seller is. If you lose that seller, you're dead. You're dead meat. You can stay short as long as the tops of those candles keep going lower. So you're short 91, you covered one at 89 and a half, three quarters. Right now you're trying to cover 89s, maybe 88 and three quarter. Put your buy orders in as soon as you're short, right? If those buy orders do not get executed, that means somebody is buying ahead of you in line, which means you might have to pay higher. But you don't want that trade to come back to break even because then what's the point of doing business? See, now the seller is at 89 and three quarters. See how the tops of the candles have moved lower from here to here to here? You're cool. Now go and put a bid here at 88 half, 88 three quarter. Boom, you're filled. And that's how you short intelligently. If you have more contracts, you can stagger your buys down here. So if the market hits those buys, great. If it doesn't hit those buys, then you can go and buy offer, buy ask, right? So you see the seller was here, they move down here, they move down here. Now in 10 seconds, the next candle is going to open. There you go. There's a nice short from 91 down to 88, 2, 3 points, 3, 4 contracts. You're done, right? Well, Moran, I'm not using I'm what I'm doing is I'll use the 9 EMA in trend. Right now it's a move up and then sideways, right? So there's no point in having the 9 EMA on the chart right now. It's on the old one, right? So here's the deal about moving averages, right? When the market trends, you'll want to use that moving average, right? So when it takes off from balance, right? And I'm going to be doing a webinar on this. When it takes off from balance, it'll go trend, and that's where the EMA will work for you. But once it starts going sideways, the EMAs are useless, right? Just use the balance area. So it's just a different tool, right? So because it's the new contract, I haven't even, I didn't even think about the 9 EMA. Thank you for reminding me, right? Right. And some people tell me to use the 20 EMA. I don't know. I still, I haven't done the work yet, right? On these moving averages. I still have a lot of work to do on them, right? Especially with execution, right? So in a choppy two-sided, yeah, in a choppy two-sided market, right? This is a distribution balance, right? You can see I could go and draw a new balance zone here, right? Right? It's a cost basis. This is what we call a distribution cost basis, right? So we go and draw, there we go. Let's see if I can find better lows here. See? Back and forth, back and forth. This is distribution, right? Exactly. It's very important to understand when to use the tool, right? Do we need a wrench? Do we need a screwdriver? Do you need a torque wrench? Do you need an impact wrench? You know? Now, I like trading cost basis because once you figure out a cost basis, all you do is you just wait for it to look below and fail. You buy some, put your stop here, sell it, right? If it if it doesn't take out the 92s, you short, put your stop here and cover. And you can just trade it back and forth. And you can make a lot of money doing that. Well, EMAs are, for people when they're in a trend and they want to know how to hold the trade. So now, like Steve with that EMA, that 9 EMA he takes on equities, it works really nice for him. But it doesn't work in ES when the ES is choppy, right? The 9 and the 20 will work on a nice trend. Like once it leaves this, right? For example, if we leave this and then go into a nice trend, once we've got the position, then you can use an EMA, right? That's all it is, right? I like cost basis. It works for me. I'm a professional trader. Cost basis has been my life for 34 years, so, and it's also how the market works, right? See, the thing is, when you work on a trade desk, there's not one guy trading EMAs and one guy trading fibs, and everybody's trading order flow, right? And they're working orders for their clients. So their clients could care less about an EMA. They're like, I gave you 1 million shares to sell. Are we done yet? Because if you're not done, I'm going to find a trader who will get me the prices that I want. Right? So there it's about working orders and working and getting fills and that kind of thing. Right? It's not about, you know, retail trading. What you're doing is you're trying to get rid of inventory or acquire inventory for a client. That's institutional trading. It's completely different. So now if we take out these 92s and stay above it, what's going to happen, folks? We're going to take a run at that overnight high. Or do we look above and come back in? I have no clue. It's a brand new contract, right? It's a brand new contract. We have no idea what's going to happen, but it's the first day, right? We just sat down. We're taking a look at this. Just relax, chill out, watch for a little bit, okay? Don't overdo it. We do have supply from a couple of weeks ago, right? I don't know how much of that got flushed out, right? I mean, we're right here. There was supply up here from the all-time highs, right? I don't know what percentage of that is still there, right? Because we went on, okay, let's use these levels, right? From 76.91, right? We dropped this thing all the way down to 73. So that's like 400 points, right? I don't know if there are people who are still long up here who are going to sell into it, especially before a contract rollover, right? So, yeah, there's still inventory, but don't be surprised if we take that 76.31 and we start taking these levels out, we could have a new high this month, right? Because we flushed, I mean, these poor bastards, they got flushed out hard, right? It's not like we flushed here, went sideways, and then did this, right? Basically, we held these people's heads in the toilet and got them to puke out their contracts, right? That was a dirty, dirty move, right? So let's see what happens. Yeah, we've had some really like this big move down and then a big move up retracement and then a slam it down and back up. What happens in these markets, ladies and gentlemen? When you have these big ranges that do this, what happens is you flush out the longs and then you trap shorts and then you trap longs and then you trap shorts. At the end of this cycle, what you've done here is you've gotten all the cash from the people and you've gotten all the product. At the end of the day, you have all their cash and you have all their product, and then you can do with it what you will. Right? Victor Niederhofer, Education of a Speculator, Chapter 1. I will take your money and give you goods. When you don't want to hold those goods, I will give you back less money and take them back off of you. At the end of the day, I will have all your money and I will have all your goods. And that is what a market is. The smart money will rob you, and you don't even know you're getting robbed. But it's just a business, right? So here we go. Look, we said there's going to be a seller up here at 96, and we stalled out right before that. So had you been a breakout trader and you'd bought 92, 93 against 92, say you went long 93, right? 94. You know up at 96 there's going to be a seller, so sell. Does that make sense? Right? That's how you manage a breakout. If you know that there's going to be a seller here and you're buying this, sell it. Do you guys understand that? Does that make sense? Does it register? Think about it. Okay? Because what's happening is the smart money who's long here, as soon as it breaks out, they're selling into it. They're not buying this. Smart money never buys a breakout. A breakout is for suckers. And what that does is it creates the buying that the people who are long here get to dump into it. Right? That's how the markets work, right? That's why a lot of breakouts will fail and come back in. And that's a good short, right? But right now you can see that they're coming for it because they're short under 70, 75, 90. They added at 92. So where the market comes down and stops going down, that's where the bids are, right? Support is created by trap shorts. Resistance is created by trap longs. Very simple. It's very, very simple. This is not rocket science. Once you learn how markets work, right? Right? Hey, Dave, how you doing? Once you understand how markets work, you just have to put together a plan to trade them. We'll help you do that at the Trading Syndicate. That's what we do. We create traders who are profitable. Look, see? You see how they're selling? See how those candles had the exact same high. So now you know that there's a seller here and they're competing. The top of the candle are where sellers start to sell and compete. The bottom of the candle is where they stop selling. That's all you need to know about candles. You don't need to know what kind of candle it is, whether it's, a Cool Ranch candle or a jerk chicken candle. All you need to know is the top of the candle is where they start selling, the bottom of the candle is where they stop. You don't need to memorize a book on candles and patterns, right? You can just keep your mind clear and understand the business. It'll save you so much time from trying to understand these kooky patterns and not understanding the business that creates the pattern. And then you try and trade the pattern and it doesn't work, right? It's because you don't understand the business that's creating the pattern. That's why here, see, look, we're coming back under 92 and a quarter. Wait for the next candle to open, right? When the next candle opens, and if you're still under 92 and a quarter, you can take a little short. You can short 90, 91, put your stop at like 92 and a half, 93, right? And you can be short. And where are you looking for? You're looking for the middle of the zone, right? But if the next candle opens in 2 seconds and it pops back up over 92, then you know, right? And as soon as you're short, go put your buy orders in. Now you're looking to see if that seller comes up to 92. See? See? There you go. Give it some time, right? It's tough shorting all-time highs or close to all-time highs on a new contract, okay? It might take a little while for the sellers to step in under 92. If you're trading, trade with the micro. Don't go crazy, okay? Make sure you get paid, okay? Make sure you get paid. Right, so if you were short 91, 91 and a half, you go put some orders in at 90 and a half, 90 and three quarter, see if you get a fill, right? Watch that offer now has to come down underneath 90 and a half. Come on. See? The red line has to move. Come on, come down to 90 and a quarter and fill the 90s. See how it stops? That's where the bid is. Watch the candle charts. You will learn so much. All you have to do is focus and concentrate. It's hard because we're taught not to focus and concentrate. We're taught to have a 30-second attention span. That's the problem. I was on a call with one of my coaching students, and I thought this person really had it, and then they started talking about buying the top of the candle and stuff like that, and I was like, "You haven't been listening to me at all." It's like, yeah, you haven't listened at all to what I said, So it's hard. It's really hard because the thing is, you guys will try something one or two times, and then you'll forget about it, right? But that's okay. That's why we have repetition. Okay. That's why we have repetition. All righty. Any questions? See how the bids came in at 90 half? As soon as we dipped underneath, boom, it brought in buyers, right? Right. It's okay. Remember, if you listen, you will make money. If you don't listen and ignore what I tell you, you're going to lose money. Guaranteed. Right? You really have to focus and concentrate, right? You have to focus and concentrate. It's your only edge is your mind in this business, right? You're outgunned, you're outfinanced. You have, they have a technological advantage. They pay 200 grand for a data feed. You pay 50 bucks. The only edge you have is your brain. Please start using it. Your brain and your discipline. You need to double down on discipline and listen. It will pay off. So I'll be starting that focus group this week, right? And, looking for those volunteers. And what I'm looking for are people who will listen and follow directions. If you're stubborn, if that's not for you, that's okay, right? But I want people who listen and follow directions. And you'll only get one shot. If I tell you to do something and you don't do it, you're gone. Okay? And then I don't care what the excuse is. But if I say look for this and do this, you have to do it, right? And that's how that'll work. Okay? As soon as I find that you don't do something, you get kicked from the group. Okay? Because our time is valuable, we want to use it intelligently instead of just chasing our tails, right? So reach out to me. Let me know if you're interested. DM me, please. And the rest of you, I will see everyone at 9 o'clock a.m. Eastern Time, 9:15 around that, for our next stream. Thanks, everyone. Be careful out there, okay? Make good decisions, and we'll see you in a few hours. Thanks for everything. Bye for